Hi, my name is Kylan Trower, and I'm the president and co-founder of Premier Equity Solutions here in Santa Clarita, California. And I'm really excited to be able to share some information with you. I want to thank you for watching this video, and I don't want to take a whole lot of your time because I know we're all extremely busy. But you already know that we're in a financial crisis. The real estate market has taken an extreme dive. Many properties have lost anywhere from 20 to 30%, in some instances even more in value. And you already know that individuals are delinquent on their mortgage payments, and you already understand that they're upside down in their property. Bottom line is they owe more than their property is worth. So what's the solution? Well, to date, there's been the loan modification and the short sale. And these are very viable solutions in some instances, but in many instances they only put a band-aid on a problem that is a long-term problem for our economy. And I'm not going to get into the economic statistics and all of the information in that regard, but I do want to share with you that there is a new solution. And the solution is called the short payoff. This is an instrument as well as a strategy that's been used by the wealthy since the 1960s very effectively. Now it's being used specifically to help homeowners stay in their home and create instant equity. The advantage to you is now you'll be able to actually help your homeowners stay in their home, earn a living, and create equity, which will result in either future sales or refinances for those of you who are either in the real estate or the mortgage industry. So that being said, let me give you a quick scenario. Okay, so let's look at a scenario that's pretty common for homeowners here in my neck of the woods. Hypothetically, you've got a borrower that in a home they bought 3 years ago. They got a 6.25% interest rate on a $400,000 loan. Their monthly payment is $2,400 or just over $2,400 a month. Now, 3 years later, that interest rate is about to adjust. It's going to go from 6.25 now to 8.25%, and their payment is going to be over $2,900 a month. So this is about a $500 disparity or difference in their payment. They see that they can no longer afford the payment. They've had a child, maybe lost a job. Other situations or circumstances have taken place in their life, and they can't afford the additional $500. What are their options? Well, they can call their bank for a loan modification, or they can get into a situation where they can short sell the property or maybe do a deed in lieu of foreclosure. So those are some options. But here's another option that I want to share with you, the short payoff. See, what our investors and attorneys are going to do on behalf of the client is they'll go in and negotiate the payoff of their loan at 65% of the fair market value. So on that $400,000 loan, the fair market value on the property is only $300,000. 65% of that $300,000 fair market value is $195,000. So our investors, through the negotiations of our attorneys, are going to go in and they're going to pay off that loan at $195,000. They're then going to reconvey and issue a new note to the homeowner for $195,000 at an interest rate of 12%. The payment on that 12% interest rate is $1,950 per month, which is absolutely affordable for our homeowner. Not only do they reduce their payment by almost $1,000, but they also have $150,000 in equity in the property. That gives them the opportunity to repair their credit and refinance the property, or if they so desire, they can now sell that property at a profit. Now, as a loan officer, as a realtor, who's going to do that refinance transaction? Who's going to handle that sales transaction? That's right, you are. But what I want to share with you, and this is where it really gets interesting, it really gets exciting for me and for my team, is that when that 65% payoff is negotiated, within that a 10% commission is also negotiated that is to be paid by the existing lender. So what does that mean? Well, that means that on a $195,000 payoff, countrywide, GMAC, the major banks that are holding these notes, are going to pay $19,500, let's call it $20,000, through escrow directly to the investors. Now, out of that, you're going to receive a 4% split. So 4 points on a 10-point, $20,000 deal nets you almost $8,000 through escrow directly into your coffers. So now what have you done in this instance? You've helped your borrower stay in their home, you've created instant equity, you've taken a property off of the books on with a mortgage company that would probably actually have to pay holding costs and significant cost over the course of months, possibly even another 12 to 18 months on that property. And now your borrower has options, and now you have another client that you can do a refinance for or a home sale for in the very near future, because we have created equity. If you want more information on this particular product and this service that is literally revolutionizing the real estate and financial community, give me a call immediately. I'd love to share more with you. Love for you to join our team, and I look forward to talking to you soon. Bye for now.